Welcome, ladies and gentlemen, to Commodity TV and a new edition of our virtual interview series. It's time for Zinc today, ladies and gentlemen, and we want to talk to Robert Wares, the CEO of Osisko Metals. Welcome and good morning to Canada. How are you, Robert?
Good morning. I'm doing very well. Yourself?
Perfect. Thank you very much. If I look at the zinc price, I really enjoy it. And I must say, if I look at zinc storages, that looks really dramatically slowly but surely. Before we start with the interview, can you give us in some sentences a quick intro or overview on the zinc market, please?
Yes, absolutely. So zinc actually in 2021 far surpassed all analysts' expectations on the markets. In US dollars, it's holding out very stably between $1.45 and $1.50 US dollars per pound. And this is again reflects, I believe, more supply-demand dynamics on the global scale. So most analysts were predicting an average of $1.10 this year. And so this is way above analysts' expectations. And again, we maintain that the supply side is becoming increasingly problematic on a global scale, and this is only starting. For example, the Tara mine, which is Europe's biggest zinc producer in Ireland, shut down last week due to a flooding event, and I believe that does not know when they'll be able to reopen again. If they can't get the flooding under control, unfortunately, that means a permanent closure of the mine. So this is one more example of how the older mines are struggling with deeper ore, lower grades, and so on. And this is creeping into the market. Another significant closure that's now official for next June 2022 is one of Canada's biggest zinc camps. The Matagami camp has been in production for over 50 years. And the final mine called Braceback-McLeod has announced closure for June 2022. So again, mines are closing, supply side is getting tighter, and the current expansion plans and new mines that could potentially come online within the next 2-3 years, you can count on one hand, and this will in no way make up for the supply deficit. So again, we're very bullish on zinc. Looking at the demand side, of course, infrastructure stimulus programs have gone through both Europe and the US. We're talking hundreds of billions of dollars. All this is going to require steel and galvanized steel, and this is where zinc comes in. The USGS is now officially named zinc a critical mineral for the US because the US has become almost completely dependent on foreign imports for their zinc supply. Canada and Teck, through their mine in Alaska, is actually a significant producer of zinc in North America, but that's not going to solve the issue of a supply side, especially in North America. And we may have there's one more significant closure slated at this point for 2024. That's the Kidd Creek camp. Glencore is right now undergoing a $50 million feasibility study to see if they can extend the mine beyond 2024. That may be successful. We all hope that it will be, but if it's not, that's another significant producer that's shutting down in the next 3 years.
Yeah, so supply is really shrinking, right? And demand is rising.
Yeah. The China just announced a massive program to build a railway structure into Southeast Asia. That's going to be rail. So rails are not galvanized, but the associated infrastructure has to be as well. So again, there's going to, as far as China is concerned, which is the biggest producer of zinc, is going to, in our opinion, China is already a net importer in zinc, and that will not change. So again, you have to look at the rest of the world, exclusive of China in terms of production, for which we have reliable numbers. And there's a net insufficiency that's already starting now, and will only, in our opinion, worsen in the coming years.
Yeah.
So all that means is zinc prices are going to remain very robust. We easily see zinc prices rising beyond $1.50 US a pound. and that would be excellent for any developing zinc projects such as the Pine Point project.
Exactly. That's what I just wanted to point out, the Pine Point project, because you guys, have a very, very interesting project. And I think also time-wise, this will come online exactly when the market is, in a real super high deficit. So the timing couldn't be better. And congrats on your latest drill results. Again, 6 meters with 20.8% zinc equivalent. Again, 6 meters with 8.9% zinc equivalent. You want to comment on that, please, a bit?
Yeah, so as part of our infill and expansion program, so we're following through, again, remind the audience that in order to proceed to feasibility, resources have to be in the measured and indicated category in Canada under 43-101 rules. So knowing that we have an inferred resources from historical data is insufficient, all that must be converted to measured and indicated, which is the purpose of our current drill program. But at the same time, we're also closing off all the known deposits because at least 10 of them are open. So we're doing additional drilling beyond the boundaries of our current resource model in order to close off the deposit and hopefully define the extensions. And so far, our drill program has basically been batting 100. In all cases, the drill data has confirmed our block model, or is expanding the block model, such that by the time we're done, we hope to have certainly the first 10 years of production in the resource category, which is about 40 million tons out of our 50, will be completely converted. And that is what will be incorporated into the feasibility study. So we're very optimistic on our ability to convert essentially 100% of our inferred resources to measure indicated, and go beyond that and expand the resource until we close off on the zones.
Super. And you want to bring in Q1 an updated PEA first, because you talk already about a feasibility study.
So so the next step before we move on to feasibility, which will be launched next fall, by the end of Q1, we want to update our PEA for two reasons. We believe, obviously, it is justified to do it right now at a higher long-term zinc price. The 2020 PEA was done at a long-term $1.15 US per pound zinc price. We believe right now the market will accept $1.30 as a long-term zinc price for next March. So that'll obviously have a significant impact on the economics of the project, but also on the resource. Because don't forget, the higher your zinc price, the bigger your open pit, because you can incorporate a lower grade material into your pit volume. I don't think it's going to have a huge volume, but it obviously will certainly have a marginal positive impact. But more importantly, again, in the 2020 PEA, we had very high speculative, I would say, water management costs based on very loose models in terms of hydrogeology in the property. And as you know, right now, we're undergoing our hydrogeological program to better quantify water flow in the ore-bearing aquifer in order to reduce those costs. And as we press released a few weeks ago, the first stage of this study has been very positive, indicated that we could potentially reduce our costs by 40 to 50% over life of mine.
Super. As you have also not to fulfill super high, or let's say too high requirements with the dewatering, does that also mean that maybe the permitting is a little bit easier and maybe faster?
It won't be faster, but obviously the less water we have to pump, the more it favors the permitting process. So, but the permitting process is really fixed. It really fixed more according to local rules and regulation. And so having to pump less water is not going to accelerate the process, but it'll certainly be easier to obtain our permits because the environmental impact will be significantly less. Most of that water, at any rate, does not carry metals. It's not even acid. For all intents and purposes, it's pretty benign. But being that as it may, we plan on putting that water back into the older pits or back underground into the Sulphur Point aquifer.
Okay, super. I saw also something in your last press release that the L65 project may connect with the M67, which is the open pit inferred resource deposit, which is only 300 meters away. So,
Yes.
are you in your ongoing drilling program now? Are you looking into that gap, and maybe you can connect those deposits?
Yes. Again, once that's part of our current drill program, is not only to do infill drilling to convert the known resource to measured and indicated, but also extend those boundaries where the material is still open. So most of the material that was either ignored or left behind by Cominco back in the 60s and 70s was the flat tabular type of mineralization, which extends beyond the vertical pipes that we call the prismatic deposits. Cominco largely ignored the tabular mineralization because it was lower grade. And don't forget that their average was 10% lead zinc at the time. And they showed very little interest in any material, let's say that was less than 7%. But for us, that is ore, obviously. So our expansion program around the known resource models is mostly drilling off the tabular zones between the prismatics, and it's thinner, lower grade, but it's still ore, and it's very shallow, so it's very easy to mine. And so the more deposits we can connect together through this program, the better. And this is one example where the tabular mineralization may extend between the two deposits, which would again add tonnage to our resource model.
Okay, super. As you are doing the 20,000 meter winter drilling, so how many meters you have drilled, what is left, and could this be fully incorporated in the PEA update?
No, right now we're completing our 13,000 meter program in the next couple of weeks, the winter program. Then we will move on to the winter 20,000 meter program, which will extend into, I would say, till spring breakup.
Okay.
And then we'll have another summer program. So the PEA is actually, we're going to take the older database, re-evaluate it at a higher zinc price, which will have, as I mentioned, an impact on the in-pit resource. And that is what is going to go into the PEA. But ultimately, all this drilling is aimed towards the measured indicated resources are going to be incorporated into the feasibility study. Okay. So for the existing PEA, the impact is mostly going to be due to or brought in by higher zinc prices and lower water management costs. And it will have a very significant impact, no doubt in my mind, on both the IRR and the NPV.
Okay, super. Can you explain us, let's say in a simple way, what is a cluster mining strategy? I saw it in your press release. I found it really interesting.
Well, this is the strategy there again is to mitigate the cost of pumping as it affects one pit that is adjacent to another pit. So rather than the pumping strategy, rather than and the sequencing, rather than do it as independent pit by pit approach, ignoring the impact it's going to have on the next closest pit, because don't forget, when you dewater, it will not only affect potentially the immediate pit in which you're dewatering, but it may have an impact on the water table on another pit that's 200 meters away, for example. So the whole purpose of approaching is as a cluster mining and dewatering process is to carry on with our hydrogeological studies to see, okay, well, if we dewater pit A, how is this going to affect pit B 200 meters away, as an example? So by taking this cluster approach, we fully anticipate being able to, again, reduce water management costs. And this is going to be implemented by knowing which way the water is flowing, if any at all. And that again depends on the permeability of the local system. So far, our tests indicate that water infiltration is really, really caused or limited to faults and fractures that are cross-cutting the sulfur point formation. There is no porous aquifer as such. In other words, the ore-bearing unit formation is not a giant Swiss cheese with full of water, no pun intended. it is really it is definitely porous, but turns out it's not that permeable. So that's very good news for us, because it suggests that water management is going to be constrained to really grouting off selected faults and then pumping thereafter. So by treating this as a cluster strategy, it's basically seeing how this affects the mining sequence, and within the cluster, this is going to, we believe, again, reduce water management costs in the whole project.
Okay,
so it's going to be tied in. So pumping, grouting, and mining has to be integrated into more of a integrated or holistic approach in order to reduce costs.
Okay, super. As you said in the interview some minutes earlier, by fall next year, you want to have the feasibility already. Have I catch that correct?
No, start the feasibility.
Start the feasibility. Okay, super. Given
that'll take a year.
Yeah, okay, that takes a year. So 2025, we see the first zinc from Pine Point?
No, it'll be longer than that at this point. Okay. If all goes well, we'll be FID, so it's called Final Investment Decision, so shovel ready. So this is where you decide to build a mine. We should be able to reach that by the end of 2024. And then comes in mine build and mine financing, which should take, I would say, another 12 months to maybe 14 months. So it'll be 2026 before we start producing at Pine Point.
Okay, that means exactly like in a good 4 years, you can hit the market when again more mines are shut down. Let's say demand goes through the roof, because we still did not talk about zinc batteries, which are also in the making, right?
That's right.
So that could really happen if they are successful. That we need much more zinc we can ever think of, right?
Yeah. Well, again, if you want to be very optimistic, and I don't think it's unrealistic to talk about $2 zinc, the value of Pine Point goes through the roof, of course, because it's going to be, again, shallow, cheap mining. Reasonably for such a shallow ore, it's actually a high grade. Again, most zinc mines have higher grades, but are underground mines, much more expensive. You can mine shallow open pits at 1/10 of a cost of an underground mine. So it's going to be a very, very lucrative operation. And again, at $2 zinc, which I think personally is where we're headed in the next
Me too.
3 years.
It's a no-brainer, I would say.
Pardon me?
It's a no-brainer, I would say.
Yes, I think so. Yeah.
Super. Robert, thank you very much for this long insight, especially also with the zinc markets. I think you have a fantastic company, fantastic project. I am a shareholder. I'm a happy long-term shareholder. I will hold my stuff because the only fear what I have is that you guys will be taken over sooner than later.
Well, again, we control 40% of our float internally within the Osisko group and managing insiders. We will certainly maintain that control block, so there's no danger of losing it to a predatory investment or takeout. And then there was always the danger of course, capital markets when you don't have a control block. So I'm not worried about that. If any offer is made at one point, it basically has to be a satisfactory offer to us and then to all shareholders.
Exactly. Super. Thank you very much, Rob. I wish you all the best. Merry Christmas.
Yes,
really enjoy the holidays.
Everyone, yes.
Also for your family. And stay healthy. That's the most important thing these days. And we talk soon. I have a very good feeling.
Very good. I'm looking forward to 2022. Should be an exciting year.
Yes,
Thank you.
me too. Thank you very much, Robert. Take care.
Take care.
Bye-bye. Yeah, ladies and gentlemen, that was Commodity TV for you in the virtual edition with Osisko Metals and Robert Ware's the CEO. Yeah, things look fantastic with Pine Point. Zinc markets look even more fantastic in that sense that the really supply is shrinking, and the demand is steadily rising. Yeah, with Pine Point, hopefully 2026, online and producing, they would hit the markets perfectly at a zinc price, maybe $2 or even higher. We will see. But fact is, those PEA numbers are fantastic, and new PEA will be published in Q1 next year, and they will start to work in fall already on the feasibility study. So stay tuned. Check out this fantastic company. If you like zinc, you should like Osisko Metals. Thanks for watching us, and bye-bye from Switzerland.